Madhur Jha, Head Thematic Research at Standard Chartered Bank is with us. Madhur, hi, good afternoon, and thank you for coming on board. Let's straight dive into how the rupee has been moving. At this point of time, of course, we're looking at an uptick of about 0.06 points. 70.4 is where it's perched at. It has recovered slightly in trade after hitting that 10-week low. And if you look at the pattern of the last 5 days, it's among the one of the worst performing emerging market currencies. What is the view forward? Is that a trend that's likely to sustain?
I think right now there's a lot of concern about what's happening with the global growth environment, what's happening with the trade tension escalation between the US and China, and as such there's a risk aversion environment globally. Of course, the fact that you also have the Indian elections upcoming, which adds to that, has made people a little bit more, wary of in general emerging markets, but also the Indian currencies. And I think that is of course going to change as you get the election results. Also, we're going to see what happens in terms of the trade tensions, because I think that will have a very key impact on how investors react towards emerging markets in general.
Right, trade tensions. Can you just talk to us about that in more details? If that leads to a slowdown, what essentially happens next?
Right. So basically, of course, as you know, the global growth story for several years since the Second World War has really been a story of greater globalization, greater integration of emerging markets in particular into global supply chains and into export supply chains, and that's how they've grown. Now, if you have rising protectionism and anti-globalization, especially in Western economies, and this rising trade tensions between the US and China, which are the two biggest players in the global trade environment. One is the biggest exporter, the other, which is the US, is the biggest importer. Obviously, people are going to be quite concerned about the implications that has for global growth in general, but especially about emerging market growth, because that export-led growth has traditionally, over the last several decades, been the main way that economies have grown. So, of course, people are concerned that if you have further tariff impositions between the two sides, that will actually impact the rest of the emerging market space. India is insulated to some extent because India is not as integrated into global supply chains, but India does get impacted through the change in sentiment, the increase in risk aversion.
Right. But if you see the kind of developments happening, there's FII selling that's taking place in the Indian equity markets. Brent continues to hover over $70 a barrel. Then there is, of course, additional pressure in terms of currency. How are you looking at the India picture from a medium to longer term perspective?
Absolutely. For us, India is one of the brighter spots in the global environment. We've just released a report called the 7% Growth Club, and that really talks about countries that we expect will grow by 7% at least over the next decade. And this 7% club is really a reflection, as I already mentioned, of countries that have in the past grown by 7% at least for a decade. If you grow by 7% roughly for a decade, you can double your GDP, and that is what has happened to several countries, including the Asian tigers like Korea, Singapore, Taiwan, and even China. We expect that over the next 10 to 12 years, by 2030s, India will be one of those countries which will be the fastest growing economies in the world. It will be a 7% club member, and that really should help bring in lots more foreign investor interest. It should help to push up per capita incomes, to support domestic demand, investment and consumption.
Right, you mentioned about the 7% club that you were talking about. Do you think if there is a marginal tweakness as far as global growth is concerned, how much of a growth impact can that have on India? Is the domestic number sufficient enough to drive a 6-7% plus number?
So India, as I already mentioned, has actually got the good aspect that it's not that integrated into the global supply chain story. Of course, if there is a slowdown in global growth, you cannot be expected to continue to accelerate. But I think India's domestic demand story is quite strong. You've had a good set of reforms which have been introduced. You've got strong, domestic consumption, a growing middle class, and growing urbanization. Now, these two factors together, growing middle class, growing urbanization, will support the demand for more goods. Also more services, so better health, better education, better care for the elderly, and that in itself, the domestic drivers are strong enough to support a very robust rate of growth. There's always going to be the risk that there is a global slowdown, which will obviously also mean a slowdown for the Indian economy. But of all the emerging markets, all the emerging market peers, India still stands to be more insulated than the rest of the emerging markets when it comes to the impact from a global slowdown.
Right. We just interviewed before you an economist from RBL Bank, and they told us that slowdown from the high frequency data is quite evident in India, and there could be a situation where a minor stimulus could be needed to boost the demand. Do you expect a stimulus coming in from the new government as they take over?
No, we've already had quite a decent amount of stimulus coming through. You've had the RBI cutting rates. We're expecting another rate cut. You've had a pretty, supportive the budget that was announced. So we do expect some of that stimulus to continue to support growth. We have to see what the election results are. There might be more announcements. We will have to watch what the election results are to get a better understanding. But I think the domestic demand story is going to be supported by the measures that have already been taken. And so we just have to see them feeding through. Also, some of the implementation challenges that we saw with some of the reforms, that's going to fade because you have seen the impact of that, and again those are starting to fade. So we are going to see growth starting to improve as a result of that. So we are expecting growth to actually pick up from here, from these levels, because you are going to see some of the stimulus both on the monetary policy side as well as the fiscal side beginning to feed through now.
Okay, Madhur, great chatting with you. Thank you so much for coming on board to share your perspective with us.